If I had to pick 5 small caps on the JSE to buy today and hold forever, these are the 5 that we'll be looking at, in my opinion. Not financial advice, just a rough overview of 5 companies that I like for the long term. I'm Miguel van Biljon, the founder of FinMeUp, and just take everything with a pinch of salt. And also at the end, let us know in the comments what are your 5 and whether you own any of these, and just give us your input as well. We'd love to hear what you say. So the first company is Renogen. So Renogen, they're a helium producer. Some of you might know them, some of you might not. But Renogen is an emerging helium and domestic natural gas provider or producer. And it also holds the right to rich renewable natural gas fields with high helium concentrations. That is according to their description. So one of their strengths, so with each company we'll look at some of the strengths and some of the risks. So the strengths of Renogen is definitely that there's massive opportunity in the space that they are operating in. Firstly, helium is needed for so many aspects in life. Medical machinery, the balloons we all know and the funny voices we make with it. That's helium. And also the natural gas element. It is extremely important for humanity going forward. So they're definitely in a great industry. The risk, of course, is it's still early if you look at the bigger picture, and therefore the risk of execution. So it depends on, do you back the management to execute this ambitious dream and vision that they have of becoming this big helium supplier or not? It's all about how they're going to execute this and how they manufacture, or not manufacture, but use and mine the gas. I'm not a gas expert or a mining expert, but it's all about execution for them. The second company is Purple Group. So you probably all know Purple Group. It's still a very small cap, around $1 billion valuation. But we all know the company EasyEquities. And that is one of their biggest aspects of Purple Group is EasyEquities. And we see EasyEquities is growing at rapid rates. They have a massive user base already. They have a barrier to entry to competition. I mean, if you think about other competition in South Africa, you can't really think of anyone. They've got an extremely strong community, and community is amazing for a business to consumer product. And they have that strong community. People referring their friends, talking about it at Bry's. They have a strong community. And we are seeing revenue growth. We are seeing the user growth. So those are some of the strengths. Some of the risk, of course, with a company like Purple Group, like with any fintech company, is regulation. Currently, I don't personally see it as a big threat now, but who knows what might happen in the future. And also another risk is if the revenue or the users slow down, the growth slow down. Of course, if we see a bear market or continuous market crashes or whatever the scenario may be, there are elements that could potentially mean slower user growth. And also the risk of possible future competition. I think that's definitely not a risk in the short term, but also who knows what might happen in the long term. But it's definitely a company that has been executing amazingly the past few years. The third company is Santos. Santos has logistic solutions like IT systems, inventory management, insurance, packaging, and more. Some of their strengths include they have a rock-solid balance sheet. If you look at their financials, they are growing revenue year on year. Even in a year like last year, that was really difficult for a company like that in the transportation space. But they executed and the revenues are growing. They have a good track record of their operations and their management. They are also globally diversified, which is great for any economic uncertainties in one country or the other. So they are globally diversified, which is great. And some of their risk include the exchange rate risk. So they report in South African rands, but most of their business is actually overseas. And that could be some of a risk when they report their financials, because we've seen a much stronger rand lately. I don't know how sustainable that is. Let us know whether you think the rand is going up or down. But there is that exchange rate risk. So the thing about Santos is there will always be transportation needed and logistic solutions in demand, because this globalization that is just increasing continuously. For all the aspects of globalization, you need transportation, logistics, and that is where Santos is operating in. So it's also a great industry to be in if you can do it well. Obviously, last year affected some of those operations, but they still managed to grow. So I like Santos for the long term. If you look at their net asset value, it is actually much higher than it is today at around R3.80, where the share price is currently around R3. So they are, if you look at that aspect, actually undervalued. Then the second last and also the fourth small cap in my pick list is storage. So storage is not as exciting as any of the other small caps. I mean, the business is what it says it is. It is storage. So the nice thing about storage is people always need to store. And the more land they can actually capture and the more buildings they make, they'll probably make more money. Because people need to store. I know so many people that are paying monthly just to store some of their products that are just sitting there and they're not using it now, but they might use it later. And that's where storage comes in. You pay per month for your storage or in a container or wherever, and you can store your valuables for a later stage and not sell them necessarily. The risks, there aren't that much risk. It's like I said, it's not a exciting company like the other startups. Not startups, small caps. But it is almost like a rock solid small cap in my opinion. It's not going to shoot the lights out, but I think it will give nice returns year on year. And if you look at their history, that's what they managed to do, as people will always need to store products. And then the final one is Master Drilling. So Master Drilling, I've been holding on for a long time now. And just basically what they do is two main things. They're in the mining industry where they do rock boring as well as exploration drilling. So they're more in the industrial side of business. So some of their strengths are, first of all, it's quite undervalued if you look at where the share price is currently trading at. Also, they have great technology and innovation going on in the business. It is also well diversified geographically. I mean, they are in Australia, they're in Chile, they're in Mexico, in Canada. And also a big strength for me currently is this commodity boom that is going on. If you look at all these metal prices and all these commodity prices going up, means that the mines are making more money. If a business, aka the mine, is making more money, they can reinvest into their business and into their products and drilling more holes and exploring more. And that is where Master Drilling comes in. So if you look at their balance sheet, also quite healthy. They're generating a lot of cash. But yeah, so those are the 5 businesses. Just to name them again: Purple Group, Renogen, Santova, Master Drilling, and Storage. Also a bit diversified in different industries. Let us know your favorite small caps. Once again, this is not financial advice. It's just 5 small caps that I personally like. Tell us what you like, and let's hear what the community says and whether you own any of these. Have a great day. Cheers.